Good morning, good afternoon, and good evening, everyone, and welcome to today's discussion on impact of COVID on Asian corporate cash management, hosted by Crisil Coalition and Greenwich. My name is Gaurav Arora, and I lead Coalition Greenwich's practice across Asia and Middle East. Before I introduce my esteemed panelists and get started, let me cover a few housekeeping items. If you hear an echo, please check your audio and make sure telephone is selected. Questions are definitely welcome. Please type them in the question/chat box, and we will address your inquiries during the Q&A session at the end of the discussion. After the event, you will be asked to participate in a brief survey to let us know what you liked about the webinar and what you might like to see from us next time. And finally, this webinar is being recorded, and a link to the recording will be sent to all attendees along with a copy of the slide deck. With that, let me introduce today's panel members. Today we have Mahesh Kini, BNP Paribas' Head of Cash Management Asia Pacific. Quick introduction, Mahesh joined BNP in 2018, bringing with him 23 years of experience gained through an international career spanning China, Singapore, and India. In his current role, which is based out in Singapore, he is responsible for driving the sales, product, and execution strategy for BNP Paribas cash management business across Asia Pacific. Prior to joining BNP, Mahesh spent 11 years at Deutsche Bank, where he held several senior roles in transaction banking. Mahesh also held various leadership roles at HSBC, ABN AMRO, and Bank of America. Next, Sridhar Kanthadai, JP Morgan's Head of Wholesale Payments at Asia Pacific. Sridhar joined JP Morgan in April 2017 and brings over 30 years of experience in transaction banking across Asia Pacific to this role. Throughout his career, Sridhar has held leadership positions within product management, client origination, advisory solutions, and implementation. Sridhar has been recognized as a leading practitioner, and in the last few years has also been named Transaction Bank of the Year for North Asia and a top 10 leader for cash management in Asia Pacific. And last but not least, Mark Troutman, DBS's Group Head of Sales, Global Transaction Services. Through a team of more than 150 sales managers and advisors in 13 markets, Mark leads the bank's origination and solutioning efforts for cash management, documentary trade, and open account supply chain solutions with clients across large corporates, SMEs, multinationals, financial institutions, and institutional investor segments. Prior to joining DBS, Mark was the global head of corporate sales for HSBC's Global Liquidity and Cash Management Product Group in London. Welcome, everyone. Let me also take an opportunity to introduce Coalition Greenwich. Coalition Greenwich is a leading provider of market information, insights, and client intelligence to the financial services industry. More recently, Greenwich is now part of Crisil, which is an S&P global company and integrated with Coalition. Now, we wanted to kick off this discussion by sharing some insights from our ongoing large corporate cash management study. These insights are based on detailed interviews which we do with large Asian corporates and Western MNC subsidiaries with at least $500 million in turnover. So these are detailed insights coming from some of these interviews. So let me share a few snippets from the ongoing study. Let's start by looking at if you look at the impact of COVID on business and supply chains. When we spoke to large corporates back in Q2 of this year, and this should not be a surprise, a large part of the corporates we spoke with said that their business has been negatively impacted. So roughly around 80% of them said their business has been negatively impacted. Having said that, I think when we spoke to some of these large corporates now in Q4 2020, so just in the ongoing study, we can clearly see that there are obvious signs of improvement, where about a third of the large corporates are probably saying that their business is returning to let's say a neutral stage. Not everything is great at the moment, but at least we are getting to a neutral stage. Now, I think everyone knows that the magnitude of impact has really not been uniform across Asia. So if you look at countries as well as looking at different industries, it is quite clear that while it has been unforgiving across most of the businesses, we are definitely starting to see green shoots across specific industries and specific markets. So we can clearly see some markets coming out of this, some industries coming out of this much in a faster manner. I think if we look at it from how corporates are looking at their banking, or more specifically cash management providers, was interesting to see was we can clearly see that the banks are playing a strong role in supporting corporates through this tough period, whether it is through things around flexibility in documentation. As we all know, during these severe lockdowns, things like wet signatures were not even possible in quite a few markets. It was important to ensure that day-to-day business is not impacted. So one of the key things which corporates really appreciated during this period was the flexibility on documentation with the right level of indemnities in place. Ensuring maximum support is provided for corporates to transition into a digital way of interacting and transacting. There are quite a few large corporates which are in many ways were already digital, but for quite a few of the others, we've seen that this situation has really prompted them to be pushed towards the digital realm. And lastly, followed by ensuring that there is sufficient liquidity in terms of in manners of working capital, turnaround time, and providing visibility into payments and receivables. Now, we also have to recognize that this period has prompted some of the most rapid development in terms of innovative or digital solutions, whether it is providing transparency into payments and receivable flows, or whether it is APIs getting a stronger push. APIs were already getting more and more prevalent in Asia, but we've seen that acceleration happening through this period as well in terms of adoption of APIs for many different reasons. And we'll touch on that when we speak to our panel members. And lastly, not to forget that as supply chains shift, or more corporates are looking to shift some of the supply chain, we do see solutions on that, especially and around risk mitigation solutions really coming to the fore as well. As we think about the most broader long-term changes, let's also recognize that when we looked at the selection criteria for cash management providers so this is coming directly from the buy side, to a certain extent, it has kind of changed the buying behavior. Digital is getting a much needed shot in the arm, where corporates or treasurers are basically not looking at digital as a standalone feature, but more as an underpinning across all the key factors in or how they interact with their banks. So things around client service, which is showing up as the #1 factor today, can be driven by digital as a key medium for providing client service. So this is not mutually exclusive. We do want to recognize the fact that digital today is not a standalone feature. It is embedded across many different facets, which you see on this page. On that note, I want to now pause and open the discussion to my fellow panelists. In order to keep the discussion focused, we will be using a framework to get into details of each one of the stages. So we cover stages in a structured format. So we'll cover how we are going through this phase. So the react phase, the respond phase, and then the reinvent phase. So let me start by actually going back a little bit, about 6 to 9 months from now. There was a time till the end of Q1, we saw that apart from operational disruptions, short-term liquidity also dried up to a big extent, and it was impacting clients' ability to do day-to-day business. So let me start with, maybe I can start with Sridhar yourself. Are these similar concerns did you hear from clients apart from liquidity during that period? Have you seen that shift happening, what we saw in early Q1, Q2 versus where we are now?
All right. First of all, thank you for having me and good afternoon, good morning, and good evening to everybody. Well, I think the point you mentioned, Gaurav, around the liquidity issues, primarily, I think, were in the first quarter of this year. Clearly, with the uncertainty around the pandemic, a lot of large companies decided to draw down, as you know, on their revolvers and build up liquidity buffers to just be prepared for any eventuality. I think that combined with a quarter end and certain rules certainly with the US banks and the dollar market meant that there was a huge squeeze. Although there was a tremendous amount of liquidity available, the cost of liquidity shot up quite significantly, and I think that spooked a lot of the participants. But subsequently, I think April onwards, we haven't seen that liquidity as a bigger issue. As you know, the bond market also opened up, and not just for the investment grade, also for the high yield. So I think that original concern around liquidity has certainly abated. I think what has also helped is a lot of the companies that we certainly deal with have liquidity structures already in play. So they have internal source of liquidity that they could mobilize. And for many of them who didn't necessarily have the full gamut of solutions, I think in the last few months, they managed to set up those structures as well. So I think that is probably something that is less of a concern for companies at this point in time.
Makes sense. And let me ask Mark, across the different segments of the market, whether it's large corporates, did you notice any difference in terms of the same situation propping up when it comes to large corporates, Western multinationals versus, let's say, mid-cap companies or SMEs in that space? So were there any differences across the segments?
I mean, it's fair to say yes. And to Sridhar's point, for some of the very largest companies, if you have access to the market, and it was quite evident, some of the largest companies drew on RCFs. Some that had access to issue fixed income later on did so. Some companies, you saw this in Asia quite a bit, went to their shareholders and did rights issues. Other companies and sort of further down the size curve, put pauses on planned capex. Another way to preserve working capital. It's clear right now that system-wide liquidity levels are at, I'd say, almost all-time highs, at least in the Asian markets I've been looking at. But even you look closer to home, be it Singapore, be it Hong Kong, other markets in Asia, access to government, facilities and funding, at least in the short term, is a place where the mid caps and smaller size companies have absolutely also tapped in for liquidity.
Makes sense. Mahesh, for you especially, and if you look across all the different industry sectors which BNP covers, it'd be good to understand, were there any specific patterns which you saw with the same structure? Did you see any differences? I mean, there are some obvious ones around travel and hospitality, but are there any differences which you see or have seen across the different segments and industries?
Thanks, Gaurav, and good afternoon to everyone. Thanks for having me here. Gaurav, let me just put this into context. So Asia was the first region to experience the pandemic. So much of the reactions from corporates and banking, was first of its kind. As I don't think anyone, among us really planned for a contingency where the whole world would shut down in a few days, and then we are still expected to operate like normal, have everybody at home, keep our systems running. So I think that context is extremely important. When we try to analyze the wave one of the reaction, from corporates and as well as banks. Keeping that context in mind, I would see the reaction from the corporates across the board. Okay, now, different, doesn't matter which industry, doesn't matter which side. I think the three important priorities was really business continuity and people safety. I think that was the most important. Liquidity, as you said, was critical. I'll touch on that point shortly. And of course, IT infrastructure to allow more than 90% of people to access systems from home was really the top three priorities. In the first quarter and even early second quarter of the pandemic, as everybody was reacting, to the situation. So in that sense, even banks, on our end, had to quickly enable our people to work. allow them to be able to run our systems. We had to rapidly ramp up our IT capacities, which I think everybody did very well, I must say. And I wish it becomes a new normal that we can roll out IT solutions every weekend, and I look forward to that. So I think that was something extremely positive that took place, and a lot of our operations people showed amazing leadership, in making sure client transactions don't get impacted. Specifically on liquidity, from a BNP Paribas perspective, we played a lead role in helping clients through bond issuance programs, tapping on RCF based on our balance sheet. Net, what most corporates did was really to build a war chest of liquidity for an uncertain months ahead, because usually treasuries plan for liquidity for 1 to 3 months. It's pretty short term. Some have better forecasting capabilities, but majority are within the 3 to 6. And in this situation, we saw corporates planning for 6 to 9 months. So it's a big change in the way liquidity planning was done. And for some of the industries which were more impacted due to the pandemic, travel, tourism, aviation, etc. Liquidity was meant to give them time to really reconfigure their business model and find that new normal in which they need to operate to keep their operations going. So if you ask me, in terms of differentiation, the underlying need was the same, which is to have a war chest of liquidity to keep the working capital going and keep the ecosystem running. But the usage of that liquidity was different for different industries. Some were really about surviving and changing the business model. Some were actually leveraging to on the benefits of the pandemic that took place over there.
That's a very interesting point, which kind of, I think, pivots us towards the next stage in terms of respond. So let's talk a little bit more about the ecosystem and business model, since you brought it up. And let me again start with Sridhar. One of the biggest aspects, so not just hospitality, but we've seen a massive shift in terms of rethinking of business models. Businesses going from B2B to C to B2C models, and many other different aspects which we are seeing. And if we look at the new normal, or whatever the new normal of the world will be, I think it'll be great, Sridhar, if we can start with you in some of the key examples which you are seeing amongst your client set, in how you are seeing that business model changes or the ecosystem changes happening.
Yeah, sure. Look, I think it's fair to say that COVID has probably not been the only cause, but has enabled, catalyzed, the adoption of digital business models. This is a trend that we've been seeing for, I would say, close to a decade. Obviously, there are early adopters, but for example, consumer companies are now very much into direct to consumers. Auto companies are looking at a different business model. Tire companies want to sell you tires that you can pay by the mile as opposed to buying it one time. So I think there's an explosion of ideas around business model changes that's happening. I think before we get to that business model change, I just want to highlight a couple of things. I think most companies, if you leave out the 3 examples in each sector, most other companies across the entire supply chain, if you will, are still in the kind of, how do I respond? What do I need to change to stay in business? So the reaction phase was over. We survived the dislocation, but how do we continue to stay in business until we are ready to evolve and respond to this business model changes? Not everybody is going to be able to pivot and change in the next 3 months. So it's a long journey. And if you think about somebody like Nestle, they've got 12% of their sales through e-commerce or direct to consumer. And similarly, Unilever is looking at something like 8%. But there is still a whole range of percentage of sales that is done through the traditional model. And so how do you get efficiencies in the traditional model? Whether you do e-commerce or traditional model, what kind of insights can you get? So the whole journey that COVID, and maybe the precursor to COVID, the whole digital explosion has done, is it's not just about going direct to consumer, it's how do I gain insights and understanding of what's coming through my business model, and how do I respond to my consumers around it. So a combination of capabilities that banking systems provide, plus other providers in the technology marketplace, are things that are coming together and creating an influence, I think, or a confluence of factors that I think are exciting for most companies and banking providers in the near future.
So that's obviously a lot to pack in. I want to take the same question and maybe ask Mark. Are there any specific examples which you are seeing? Because this is obviously, as Sridhar said, obviously some of these changes were already underway, and COVID has probably pushed them or accelerated those changes. But are you seeing it the same way? Are you seeing it slightly differently across countries?
I'd have to say yes. I'm seeing it mostly the same way, and I think, Sridhar, to pick up on one of your words that you used, catalyzed. I think it's a great word because it really has, it really nicely describes what a number of companies have done. There is kind of a continuum of the market, if I can kind of describe it that way, where there have been some very market-leading, forward-looking corporate treasury teams, wider businesses in different industries that have been much further out in terms of business transformation, top-down. But more companies than not have been, adding capabilities, adding transformation digitally, addressing business model changes kind of iteratively, more typical and traditionally. But COVID and the immediate response after, figuring out what the lay of the land is and what companies needed to perhaps deal with, everything from, we've seen everything from, let's say, car companies that have wanted to be able to sell but couldn't open the showrooms to sell. So rather, let's take, initial deposits or initial down payments, using Pay Now in Singapore as a for instance, as a form of digitalization, and now kind of extending, that into the service center after sales market activities and doing away with credit cards or checks and moving straight into scan and pay as an option. In corporate treasuries, it's not been completely outside of the realm of reality for a number of companies to have a range of banks, some of which they transact with electronically, others they don't. They didn't want to put in place the automation. There was a quick move away from that during the lockdown, actually, in some of the markets. But even in a place like China, and we've done some press around this, companies realizing that they needed to help their distributor model, and so moved very quickly to create capacity, liquidity and working capital capacity for the distributors to be able to essentially sell more. And so using technology, using API, moving into using API connectivity in a way that allowed for contactless interaction, really helped this kind of it's like the manufacturer sell more. So 3 examples there of the practical aspects of quick response.
Mahesh, more or less the same question to you, because obviously client sets can be quite different, and obviously it's very interesting to hear a couple of examples from Sridhar and Mark. Are there similar models or you're seeing, or any other industries which you are seeing within your client set?
Sure. Gaurav, the big headline, on the transition from wave 1 to 2, 3, or the new normal, is really a transition from electronification to digitalizing the business model, right? The wave 1 was more reactive, as you put it in the slide, react to the situation, and look for a more dematerialized environment of interacting with your ecosystem. But into wave 2, wave 3, it's really, realization of a new business model. Like I pick on what Sridhar said, that, the new digital platforms, e-commerce is not new to APAC. Asia Pacific contributes more than 50% to the whole e-commerce marketplace volumes today. What the pandemic experience has really, triggered is an acceleration of the deployment of the new business model in the various markets in Asia Pacific. So it's really, put the speed into implementation of the new models. I always use this thing that where in normal situation a consumer could go to the shop front and buy his or her things or goods or services. In a lockdown situation, a consumer couldn't come, so the business has to go to the consumer. Easier said than done, because it really means a huge change in the supply chain and the logistics management for a corporate. So I can give one example here, which to me was very interesting. Being a French bank, we deal a lot with luxury brands from France, Italy. They never ever wanted to ever go e-commerce. They always wanted to give that shop experience to clients. Come in, feel the leather, buy your things, and of course they're all very expensive items. But we had a number of cases, particularly in the second quarter of the year, where this segment actually came to us to implement their own e-commerce portals and be able to connect new payment channels, to their e-commerce portal. That to me was actually a surprise. I didn't expect this industry to really, be one of the first drivers towards adoption of e-commerce, but it has actually taken place. And I think the key characteristic that we saw here for this particular industry was actually the speed of implementation. We had clients coming to us who wanted to get their transition completed within 30 days, including integration with the payment aggregator, MIS, reconciliation, etc., which was very challenging. But with strong people commitment, both on the client side and our side, we managed to actually meet those expectations of the industry. But the evolution of the luxury brand segment is I think is a classic case study that we could put that on the board in terms of how the industry has really reacted to the new normal.
Sridhar, would you like to comment on that as well, or?
Yeah, look, I just want to pick on what Mahesh has mentioned. I think the choice of words was really interesting for me, because I've always held this notion that digitization is not the same as electronification or automation. I think there's a very big difference. I think the leaving aside the business model change, which I think is more long term, I think the response that most clients I've seen have had is really around automating, electronifying some of the manual processes, whether it's check payments or check receipts, sales collection, all of those pieces, moving away from manual, physical kind of things to automated electronic areas. Liquidity management, which sometimes for some of the clients was a hobby, has now become a safety net. There's no choice but to ensure that you have that thing it's like taking a vaccine. There's no choice. You've got to do this. I think supply chain, to be fair, even before the dislocation because of COVID, there have been all kinds of geopolitical issues around supply chain. But I think the combination of the geopolitics plus the questions around resiliency are ones that have forced supply chain changes. And to Mark's point, that has now created more opportunities for both our clients and for us to partner in terms of how do we support new supplier onboarding, how do you support working capital. So I think some of the disciplines and capabilities that banking systems afforded treasurers and treasuries and corporates have not been new, but it's really a realization that these are absolutely critical things that you need to check the box for. And perhaps the laziness in the system around let's not change it because that's the way it's always been done has moved on. I think that impetus is there, the catalyst is there. So we've seen a lot more electronification. And in my mind, that's the first step to actually having that realization of the digital dream, because now you have a lot more data, you have faster data. I got a few other points I want to make later about the speed of data, but I presume that's enough for this particular session or question. Gaurav, are you on mute? Wait, you're still on mute. I think you hit the mic.
We may have to carry this for a few minutes, Sridhar. Maybe let me, while Gaurav's getting his mic back on, maybe let me add to what you just, both of you just said it, because I think Mahesh, you said it nicely, electronification to digitalization. I kind of see it also as, and I kind of look at companies across what corporate treasury is doing, but also what the wider business is trying to do. And it's clear to me that, we all kind of sometimes learn through osmosis, sometimes we learn because we consciously want to go look for something. And for me, I'm starting to see much greater awareness, I should say, within the treasury remit for the art of the possible that comes from digitalization. So it isn't just about electronification anymore. It is actually, what can we do with data? What can we do if we were to move to a 24/7 type of treasury activity? Can we, eliminate the daily cash management activity and move it into an automated sort of capability? Earlier in the year, we did there's an event that happens every year in Singapore that raises funds. It's a televised charity, and historically it's been a telephone in to place your donation, and the donation is paid through credit cards. And in this case, they completely eliminated that and moved to a QR code based instant payment collection capability on a Sunday night. Very powerful. And once people start, and I think all of us start to see, I hadn't thought of that use case. Let me see how I can apply it into my business. I think we're going to see a real breakout in the next couple of years ahead.
We did also receive one question from an attendee, which is on how are banks helping clients move higher towards adopting digital business models? Would anyone want to comment on that as well?
I think we got that question a few times.
Mahesh, do you want to take that?
Yeah, sure. I think I will answer that into two parts. What we are helping clients first is on the electronification of the client experience on the banking front. Which is in terms of increasing the interaction and the usage of electronic channels, migrating from checks to electronic modes. I think this has been quite significant for us at BNP Paribas. I've seen volumes on checks come down by more than 50% in the first 6 months of this year. Checks was anyway in the decline in most of the locations around the region, but I think with the pandemic situation and the need to switch to more electronic modes, we did see a massive shift from paper to electronic, and thanks to all the investments that we've made, some with the support of the various central banks and the payment initiatives into all the real-time payment systems around the region, we could actually seamlessly move the clients over from paper-based to electronic mode. So I think that's the first big change that took place in the first 6 months of this year. The other two very important areas around the digital experience with clients is around account opening and that whole KYC experience that clients are looking for. And at BNP Paribas, we have a global strategy towards it to look at a global platform which can help clients to actually submit electronically documents to us, so that we can cut down or minimize the need for contact in terms of account opening. Of course, there are legal challenges in some of the markets around this to accept digital documents, but wherever it is possible, we do move into that. And last but not the least, I think from more around, I think we spoke about customer servicing and the whole approval management process. I think in these areas, we've seen a significant amount of change around how we interact with with the clients. And I think this helps both the clients in terms of getting the digital experience and for the banks as well, because we get more efficient in the way we respond back to clients using digital tools, digital inquiries, self-service capabilities on our platform, and then it helps us to get more efficient. And we as banks, we're going to operate in zero interest rate environment for the next few years. So I think it is also helpful for us to manage our efficiency and costs as well to deliver competitive products to our clients.
So, Peter, maybe let me also answer the question that was posed real quick. So from a DBS perspective, a couple of things that we've been doing. It really spans the different, knowledge levels in markets. So in China, there are a much greater awareness about how to use APIs in business models, and so we tend to create together because there's already a template and a strong cloud-based architecture already in place, and some real awareness of what we're aiming for. In other locations, we educate. We spend quite a bit of time not only with finance and treasury, but also talking directly to the technology teams or the third-party outsourcing providers that have been engaged to look at designing whatever the mission is and the use cases that's trying to be solved for. So two different ends of kind of the same spectrum of how we help customers navigate the path to digital.
Yeah, I think from my standpoint, it's very much agree with what you guys said. We thought about it as a framework which starts from the onboarding point to transaction, connectivity, execution, the reporting and analytics down to customer service. And I think as typically as banks, we all had assets, digital solutions in each of these realms that were probably designed somewhat in isolation. And I think what this crisis really helped us do is to, kind of sit back a little bit and reimagine what that value proposition would be in a more complete sense, because, every part of that cycle was disrupted for our clients. And I think the ability to kind of reimagine that and re-architect that or re-explain that was much more compelling and powerful, just given the situation that clients were in. So I think we've all as an industry benefited from it. There's still a long way to go in every one of those pieces, especially in the whole analytics and reporting piece.
Great, thanks. Looks like we received another question too coming in. How do banks break ground with data? Due to a variety of reasons, seems banks struggle with leveraging the best asset they have in the digital world. Anyone like to take this question as well?
No, in fact, actually, we are in a very, very good place, if I might say so, around being able to bring data together for our clients. I think the challenge that many clients have, and I'm going to show it as a challenge as far as opportunity, not all clients use one bank. And so the data that each of the banks hold on behalf of a client is just a sliver of that information that the client will have. Now, large companies would put together their whole data analytics infrastructure that will help them understand their ecosystem better. If you think that companies don't have technology spend or technology resources, just imagine, mining companies, oil companies use supercomputers. They have some of the most sophisticated algorithms to understand where to dig for oil or where to dig for coal. It's just that huge resources is not actually delivered to the treasury side. It's delivered to their research or other kinds of areas. So the point is that technology is an enabler for everybody. What we are working with clients is around how can we help them understand and make decisions, gain insights, gain knowledge around the data that we hold for them. And in many ways, the conversation with clients have been, this is interesting. We know we don't have all our data with you, but it's helping them reimagine what they could do by themselves at some point in time in the future when they have their own infrastructure and be able to do it. So I think, again, it's a very shared learning. So to the extent that we hold a majority of the client data, we can provide that insight. And I think some of the tools that we now have, whether it's machine learning, AI-based tools, etc., are actually very helpful. So it's a voyage of discovery that for both us and our clients around the art of what is possible here within the treasury space.
Sridhar, let me add to that, unless Gaurav, are you at a place where you want to ask another question?
Can you hear me now?
You're audible, so.
Okay, there you go. That's one of the impacts of COVID is all learning how to deal with technical issues by yourself.
Let me quickly add to Sridhar's comment, and just a slightly different set of examples, but I think ones that amplify what he said. It's also clear that government bodies are actively promoting the use of data in safe ways, and so we have something called MyInfo in Singapore, which helps with the KYC and the onboarding process. But other markets have similar sets of access, and so as financial institutions, as commercial banks, as we get the ability to tap into these, we can achieve with data some pretty cool stuff, like completely contactless supplier onboarding in sort of an hour rather than 4 days in a supply chain type program that's distributed across physical geographies. We also can take data and add to kind of what we already can see and use third-party data and design alternative lending models for, let's say, the e-commerce space. So we don't need to go to each and every supplier and try to get 3 years of backward-looking financials that don't really tell you what's going to happen and with your risk going forward. Two examples there of making much better use of the data that we have access to.
Yeah. Mahesh,
And Gaurav, if I can make just I can make a 30-second comment, a slightly different dimension. I mean, clearly, it's a fantastic question around data, and banks have been struggling with the use of data, on a legacy basis. We have a lot of data. What we got right was first to put this data together in a more static fashion. But what is really expected today in the digital world is to use the data smartly to apply it to different activities and actions. BNP Paribas has taken a different approach where, in addition to our own technology, we also co-create with fintech companies where we see that time to market becomes much faster. You get good ideas on the wholesale side, on the B2B front, topics around cash forecasting, topics around reconciliation, on real-time cash application. I think these are becoming real topics now as ecosystems are becoming more real-time and online. And here we have a very structured and organized approach towards working on a co-creation basis with clients and with fintech partners coming in who give us the idea. We bring that idea into our technology environment and then offer it as a solution to clients on a BNP Paribas front end, which I think gives a lot of comfort level to our clients from a security and IT infrastructure perspective. So a slightly different approach towards managing data and using this in terms of taking corporate actions, treasury actions, etc.
Makes sense. The 2 points which I picked up was one, Mahesh, you mentioned cash flow forecasting, and this was the real test. This year was a real test of cash flow forecasting, and to a certain extent, some of the other elements which you saw, which you talked about as well. And to Sridhar's point on data and Mark's point on data, I think there is obviously everyone recognizes that there is value to data. There are 2 parts to this. One is the ability to generate data and convert them into insights and real-time insights as such, but also to a certain extent for the buy side's ability to consume and aggregate that data into something which turns into actionable elements for the business itself. Have you seen any big shifts happening in that space? Because yes, we've been talking about this for quite a long while, but have you seen any big shift in terms of, apart keeping aside, let's decouple the world, the digital first companies versus the traditionally large companies like the P&Gs and the Nestle's of the world? Is there any difference which you are seeing? Has the appetite gone up? Has the appetite to turn it into actions faster? Has that gone up? Sridhar, let me start with you.
Well, absolutely. I'm going to give you two examples, I guess, to illustrate the point. One is something that we do, and we take a lot of pride and care around this whole thing around cybersecurity. And so, as the largest dollar processor, we process $1 and $5 that moves in the world, and so we're supporting other financial institutions around the world around this. And even before COVID, but especially during COVID, this dislocation, we've seen an increased attempt at in terms of the cyber threats and attacks. And so one of the things that we do is use data intelligently, big data, AI kind of thing, to look at patterns and obviously go back to our clients and ask them questions around certain types of transactions. So very, very impactful, very meaningful to support a safe environment. But the second piece that I want to highlight really is around actionable data, as you said. I think we're still some way away from being able to actually use data in a real-time basis. Certainly with things like credit cards and merchant acquiring, we can make instant decisions around whether it's a good transaction or a bad transaction. But more importantly, I think as we think about account structures, around liquidity flows, these are not things that you do on a transaction basis, but aggregating data for a month, 2 months, or looking back and analyzing the data associated with it can give us a lot of insights around why are we having these currency pairs that we use, or this accounts that we use, and the flows that we use. And so there may have been a historic reason for it, but then sitting back in 12 months or 18 months, I think that's the value of the data. But I think as with all data, it's about how it's organized and how it's presented. I think historically, most of the banks, I would be fair to say, and most of our clients had data in segregated silos. And so with things like our databases, data lakes, and data aggregated structures, we now are able to present it in a much more coherent fashion that helps drive forward-looking decisions.
That makes sense. Mark, do you see it in the same way? Are there any differences which you are seeing?
I'd say I see it in the same way. I think outside of the digital native type companies that get data and they understand the value of data and they do everything they can to get data, I don't think that the majority of corporates in sort of their engagement with their banks think the same way as yet. There are some forward thinkers. You might see it in certain industry sectors or certain types of company profiles, but I think we're a long way from that. E-commerce would be the one where I think you're seeing more and more data from banks being used and consumed. But to pick up on one of Sridhar's earlier comments, most of our larger companies are multi-bank, so we only give a sliver. And if our data and metadata is constructed in a certain way and it's different than somebody else's, there's still a lot of retagging that has to happen.
Yeah.
But we'll get there.
Let me shift gears, and I just want to cover one more point before we actually get into the last phase. But because the world is talking about APIs quite a bit, and Mahesh, let me start with you. As APIs become less of something which is innovative or breakthrough, it has become a household thing now. You see a lot more appetite coming through for various different reasons. Are we looking at, and if we can split the scenarios into short-term versus long-term, are we potentially looking at how corporate treasurers or CFOs look at APIs? Is this going to have an impact in terms of how banks think about channels for corporates as such?
Gaurav, I'll add one more dimension to your question, which is to also split the discussion short-term, long-term, and also level of sophistication on the buy side versus the others. Okay. Now, going back to the previous question that we were discussing around data and the use of data on the buy side, if you look at it from a client sophistication perspective, clients are more investing into their own platforms, into TMS, the treasury management systems, making those more real time and be able to react to the new world. So such kind of clients, even short term today, what they ask for is just a feed from the banks in terms of information. They don't expect a front end. They don't expect platform. So that's where one particular, API, use case comes into play. There is of course other channels like Swift, etc., which also plays in this area to be able to feed into real-time TMS platforms, right? So clearly that segment of the clients who are saying, I would develop my own cash management system, irrespective of which banks do I deal with. All that banks need to do is give me a data feed, and for that I will use protocols which are standardized across API so that I can hold data, or I use Swift so that I can get standardized formats. Okay, so that's one segment, short-term, sophisticated. Right now, if you look at the others, which are moving towards sophistication but not there yet, I think for them, short-term, it will be more front-end based platforms which the banks can actually, bring value towards to help them to bridge the gap between legacy and real time. Okay, so I think that would probably be a short term. To me, on API in that space, the use case, practical use cases, there will be many use cases which will be there, which we can prove. But I think the practical use case will need to be carefully fished out, so that, to your point, end to end, both from the bank side to the buy side end, there is proper use of that protocol. I think that's how I would conclude the short term part of it between the two segments. But if I look at the long term, across the board, on the client segment side, and here I bring in the element of the change in the business model of our corporates, more moving towards platform based. I think here the number of use cases to APIs will quadruple, or will be more than that, because at the end of the day, an ecosystem will need the necessary connectivity to be able to link the different systems together. Right, and I always go back to our mobile phones, and iOS or an Android exactly does that. It all works on a platform of an API with a core iOS as a system interface, and then all the apps talking to each other to make sure that there is synchronization of the action that the consumer is taking. And I would think on a long term, API will play that role even in the cash management space, because to me, cash management will become part of a client's ecosystem, and that's where it, the nucleus will shift from to be more front-end based platforms.
Makes sense. Sridhar, anything you want to add there? I think Mahesh, that was a very comprehensive answer, so thanks for that. Unless Mark, Sridhar, if you have anything else to add, we can move on.
Yeah, I'd like to just add a couple of things. I think API is an enabler for what I think we should talk about as real-time treasury. So it's one of the components that will build real-time treasury. And I think, new platforms around treasury management are another component, for example. But I think what will be really helpful to live that vision is really to kind of stress test what are current policies and procedures. What are some of the practices that you have? So it's great to say I have APIs, but if your entire payment cycle is going to be run only twice a month, APIs or no APIs, it doesn't really matter. I think most businesses and treasuries I know are for sure looking at APIs from sales collection information, especially where they go into marketplaces, etc., account information in terms of balances, etc. But in a public forum, one of my clients, what didn't disagree with us, but said, "What am I going to do with that information? I get information update every 30 seconds. I don't take action every 30 seconds." And so you have to think about the whole continuum of real-time treasury, the words that Mark used a little earlier. I think as customers reimagine what their treasury processes would be, tools would be, policies would be, I think the opportunity to use things like API are enormous.
Yeah, and to add, I'm with you both, gentlemen. It's really more in the sort of the B2C businesses, so consumer-facing businesses, whether it be on sales or when actually the customer experience is seen as a key differentiator to either try to protect market share or win market share. So you see it in insurance around claims payments. The ability to file a travel insurance claim when your flight gets canceled, let's hope that we all have that opportunity to have a flight canceled on us again in the near term. But when you can do that at 2 o'clock in the afternoon on Sunday, and you get, you can see that you got paid, actually the trust factor with your insurer goes up probably quite significantly, and actually you're more likely to be a repeat customer rather than worrying about whether you're going to have to go through a paper process and 4 weeks later you might get a check. We had a colleague in the bank a couple of years ago, a millennial who received a check and had never seen one in her life. What do I do with this, right? So unfortunately I come from America, I'm used to these things, but I realize that that's not quite the case everywhere else in the world. I think, look at DBS, it's clear we've staked a future around the use of digitalization and APIs in that process. We've got probably the world's largest financial services platform for APIs, something like more than 200, but it's not just cash management. It can affect and be highly impactful in supply chain, both on the receivable side, but also on the payable side. So it to Sridhar's point, it depends. If someone's only making an AP run once a fortnight, doesn't matter. The use case matter.
Yeah, absolutely. And I know that we are kind of running short on time, so I'm gonna just move to the next stage, which is the final stage. And if we think about from here onwards, I would just like to get everyone's now recommendation or views. If you had to think about the treasurers, the CFOs, what would be, I would say, the couple of key recommendations which you would have for companies? We're not completely out of the woods. I think everyone knows that. So we are partially out. We are looking to be out fairly soon. But considering what we have seen in the last 1 year or so, I would just like to get everyone's views on what would be the key recommendation for the buy side, the CFOs and treasurers, in how to cope and how to deal with the new reality. So maybe I'll throw it to Mahesh first, if you want to go first, Mahesh.
Sure, I'll keep my conclusion very practical, Gaurav. This companies, corporate treasuries, have to continue to operate in this current environment. Yes, the environment is different, is difficult, but underlying corporate treasury objectives are still very similar. Which involves efficiency, automation, reducing number of bank accounts, profitability, cost management. They remain to be key focus. This will be the additional element which will come is in terms of quick transformation towards digitalization and management of the new ways of working, new platforms. The positive thing is that we are located in Asia, which is expected to grow faster as a region versus our counterparts in Europe and the US. Hence, my recommendation is to keep all hands on deck. I think what is most important, which sometimes we forget in a digital world, is communication. And I think we need to ensure that we network, we communicate like what we are doing here in this on this platform, share ideas, and keep the dialogue going so that we navigate through this new normal as smoothly as possible and settle the new ways of working.
That's good. Sridhar?
Yeah, I'd say embrace digitalization. It's a journey, not a destination. Challenge your business partners, your banking partners, so that there's shared learning. And I think, to be fair to all of us here, this is going to be a sustained effort. This is not something that is over tomorrow. So we need to sustain that effort and enthusiasm over a considerable amount of time to cause impactful change.
Gaurav, then to add to Sridhar's comment, so I fully agree with using digitalization, whether it's to find efficiencies, cut costs. Obviously, I think for the next period of time, it's probably also conserve cash. So, continue to and think about whether one uses supply chain finance programs or factoring, and just really work on supply chain diversity and resilience.
Sounds good. With that, I think we are on the hour. I know there are a few questions which have kind of popped up, but not to put everyone on the spot, but there's a very specific question which has come in which is also related to a regulatory change, specifically in India. So there is a question on what is the impact of what will be the impact of cash management industry in India due to the recently announced current account norm by RBI. I know this is a loaded question, so I don't know whether any of the three of you want to take that on right now. I know that things are not very clear with regards to the legislation as well. So, but we can always take this offline if no one has any comments at this point of time.
I think you summarized it well, Gaurav.
No, I truly understand. It is a very gray area. So with that, thank you so much for everyone for spending their time today. And I apologize for the technical issues, but I'm glad that we had a very lively discussion while I was not there. So I don't need to be there. So invisible is good as long as we had a lively discussion. Thank you to our audience who came in and spent their time. Just to recap, there will be a brief survey which will go to all the attendees, and the recording link and the slide deck will be shared with the attendees shortly after the webinar. So thank you again for making the time.
Thank you, Gaurav.
Thank you.
Thank you very much.
Thank you, Gaurav.